Hello traders and welcome to another video review. Today is Thursday, January 4th, 2024. Let's find out what's going on the economic calendar in today. What do we have here are the most important events for today. As you can see, we got some data scheduled for release during the New York session, but before of that we are still waiting for the German CPI data. Very important data release, high impact on the market. As you can see, I got all of them lined up here, and most of them will be released during the New York session. German CPI expected to increase from minus 0.4% to 0.1%. Then we got 15 minutes later ADP non-farm employment change, expected to increase from 103,000 to 115,000. Initial jobless claims are expected to decrease from 218,000 to 216,000. And then quarter to 4 o'clock we got the S&P Global Services PMI, which is expected to increase from 50.8 to 51.3. And at 5 o'clock we got crude oil inventories data scheduled for release. That should increase from minus 7 million to roughly minus 3.2 million barrels. So very straightforward calendar for today. Plenty of the very important news. Most of them are scheduled for release during the New York session. Let's find out what's going on the charts. We are going to start with euro dollar. Euro dollar is gaining a little bit after it almost hit the 61% Fibonacci retracement on the 4-hour chart. 61% Fibonacci retracement was located at 1.0883. The low was made at 1.0894. So as you can see, 10 pips difference. So can we agree that this level has been made with the 10 pips difference? I think we do. So we can get rid of this Fibonacci retracement, and what do we have here is movement to the upside, bearish divergence, bearish engulfing. So we go down as far as 1.0894 is. There is a technical support at 1.0889, 5 pips away. So there's 5 pips miss of the technical support and 10 pips miss of the 61%, and we have a bounce just above the 100 periods of the moving average, 100 periods moving average located at 1.0961. Local high 1.0970. But if we take a look at the momentum, we can clearly see momentum bounce from extremely oversold conditions, which is why we might have this bounce here before the technical support and the 61% Fibonacci retracement has been hit or tested, right? So now where is the next target? The next target for bulls is located at 1.0999. so basically 1.10 and 1.1018. So those are well-known two levels. Both of these levels are apparently part of the some sort of the zone. Let me just get rid of this. There you go. Oh no, this is not what I wanted to do. This is my current zone. Let me just get rid of it. There you go. We got one more level here, 1.01062, but it's far away from the current price, much more closer to the swing high located at 1.1140. Now momentum is still negative despite the bounce. Momentum is still below the level of 50. So if we even go towards the level, let me just show you guys with the arrow. If we even go towards this level here, which is the key level for the bulls, of course, if they want to move higher. Okay, so this is the level. We need to break. We need to break above this level in order to rally higher. So as long as we trade below these levels, the outlook remains bearish, despite the fact that 61% Fibonacci retracement was almost hit. All right, so the situation is very tricky on the euro dollar. We got some piercing pattern here, but it's not that strong. And the bounce to the upside is most likely made because of the recent extremely oversold market conditions were hit. So that's the reason. And if we get below this level here, the outlook is even less promising, around 1.818, 1.828. There is another technical support before the swing low at 1.0722 is hit. So that's the euro dollar, because there's plenty of the data related to the USA. Let's find out what is the S&P 500 doing. Okay, let me just switch on the daily time frame chart first, because I want to show you all-time high on the S&P 500, 4,793 points, and now we're coming off the extremely overbought market conditions on the daily time frame chart. Okay, so if we apply some sort of the line to the lows of the 27th of the October, and through this this line, this level here, okay, we can clearly see the market has broken. There you go, the market has broken below this trend line. So we got the all-time high and intraday technical resistance located here. So there you go, this is the big thick red line. Okay, now we are heading towards the technical support. The next technical support, the previous swing high is located at 4,612, and this is big technical support, right? There is still some room for the downside left, because right now market trades 4,710, and so there's at least 100 points to the downside to be made. We are testing 50 periods moving average. Soon we will break and move lower, especially if this level here is clearly violated. This level is 4,692. This is the technical support, but it might not be very, very strong for the bears. Market coming off the extremely over about levels. 57 points is the current reading of the RSI. Nevertheless, the whole outlook looks very very bearish, despite the fact that we got this very nice sharp how many percent it is. Let me just take a look how many percentage is the recent level, the recent move to the upside. 16, almost 17%, right? Very nice, 17% movement to the upside. Nevertheless, it still doesn't look good on the S&P 500. Pullback is coming, or even deeper correction is coming. Okay, what is then US dollar to the Swiss franc doing? Okay, daily time frame chart is showing us very nice bullish hammer after the end of this very big down move. So US stocks might come down, US dollar might appreciate across the board, right? So there will be increased, let's say increased volatility on the US dollar related pairs. Now, very very interesting situation on the US dollar to the Swiss franc. We got let me just find the arrow. There you go. We got this technical resistance located at 8,500 and 8,553. It used to be a very nice technical support. You can see it here, but it was of course violated during the down move. So that's the level I'm talking about. Okay, now it acts as the technical resistance. Market is under 50 and 100 periods moving average. It trades into the extremely oversold market conditions. Hammer was made, bounce was made from the loss of 8,332. If we break above this level, the next target would be somewhere around 8,666 and then 8,815. So it's a very nice movement on the US dollar to the Swiss franc ahead of us if we break above the technical resistance. We got hammer from the downside, shooting star from the upside. So this trading range looks to be maintained, but any breakout to the upside will be bullish. And last but not least, the Bitcoin. Why we talk about the Bitcoin? Because we got very aggressive sell-off yesterday, 11.57% sell-off on the Bitcoin after the Bitcoin ETF, spot ETF, was postponed to the second quarter of the 2024, and that was the market reaction. We bounced towards $43,296, and we are hovering around this zone, $43,600, $42,005, and the market doesn't know where it wants to go, because the movement to the upside was initiated very nicely. We got a new 2024 high, 45,946, but then the news hits the market and we reversed back into this big consolidation zone, and the market is still under the bearish pressure as the momentum is at the level of 44. So we might see more or whipsaw trading conditions, up and down, oscillating up and down again on the Bitcoin, unless the bulls will decide to continue that uptrend no matter what, or the bears will decide that they are fed up and they are throwing the tower, they are throwing the full power on the Bitcoin market, and they are testing the recent levels on 40,632, technical support at 40,165, or even the 39,824. So please keep an eye on the Bitcoin, very violent market. Anything can happen on this market because it's very susceptible to the rumors. So please watch the market news, watch the rumors, because the last one costed the Bitcoin bulls 11.5%. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.